Welcome to Innovation Leadership. I'm Jess Larson. On this episode, we get to have Chris Bogart. He is the CEO over at Burford. If you don't know what they are in legal finance, you're about to find out, but they've got $7.4 billion under management. They've got a market cap around $3 billion, and they're the world leader in it. Chris, thanks for doing this.
Thanks, Jess.
For people who don't even know what legal finance is, can you tell us what the industry is?
Sure. Legal finance, in very simple terms, is just putting capital against the underlying value of a legal claim. So if you have a piece of litigation, an arbitration, even a regulatory proceeding, that has some value associated with it, and we enable people to unlock that value by supplying capital to them. It's that simple. Think of it almost as leasing for litigation.
And can you talk about your career leading up to this and the giant merger and some of the other things that you feel like prepared you to start this business back in 2009?
Sure. So this is in a lot of ways an accidental business for me. I started life, I spent a couple of years doing investment banking. I started my real professional life as a lawyer. I was a classic American trial lawyer, even though, like you, I'm Canadian originally. So I went to law school in Canada and I clerked for a court in Canada. But I came down to New York and spent a bunch of years as a trial lawyer at one of the big New York law firms, Cravath, Swaine & Moore. I moved from that to being the general counsel of Time Warner, the media group. And then after Time Warner merged with AOL, I flipped into a business role and started doing advanced technology work at Time Warner, which ultimately led to me leaving and forming my own tech media venture capital firm. So I was happily out of law, doing my tech finance thing. But along the way, a college friend of mine called me up, and this is a long time ago now, and he was at one of the big law firms. Those law firms just like to bill by the hour. Usually lots of cost per hour, but that's what their business model is. And he had clients who wanted a more risk-based arrangement that just wasn't going to work with the business model of that law firm. And so really as a favor to him, I started as a hobby, a little fun, just a friends and family sort of endeavor that just backed a few cases that he would take on. And I did it to have some fun, to keep my fingers in law, and to help him out. And that started to attract the attention of other law firms. And so I had inbound requests from other law firms to have me do the same thing for them as well. And at the time I said, no, I'm not interested. I've got my day job. But the financial crisis came along in 2008, 2009. That made my day job less fun because there wasn't a lot of equity value in the market. And at the same time, law firms were going crazy for capital because their clients had liquidity problems and didn't want to pay them. And so in 2009, we started Burford. We raised institutional quality capital in the public markets in the UK and started what has now been a 15 or 16-year journey to create a new industry, a new asset class, and in Burford, a multi-billion-dollar business.
Well, congratulations on that. When you think about the nuances of this space that outsiders wouldn't understand, I mean, I hear things like, "Hey, we did 30% last year," and those are pretty exciting numbers to some folks. But there's no such thing as a free lunch. What are the complexities that need to be mastered to have outsized returns like that?
Well, the complexity is that this is large dollar complex litigation. This isn't consumer litigation. It isn't slip and fall stuff where who's right and who's wrong is usually pretty clear. And so just like any large dollar complex investment class, this takes a lot of diligence, a lot of work, a lot of specialization up front to try to winnow down the pool of available opportunities to things that are actually going to perform. We only close a single digit percentage of the stuff that comes in the door. And that's really what it's about. We effectively had to build what is really a law firm inside Burford to do this work. So we have 60 or 70 lawyers around the world who are experienced litigators who spend their days not litigating anymore, but just being investors, looking at pieces of litigation and arbitration as a financing matter instead of as a pure how do I go to court matter.
I'm interested in how you build that internal capacity. I think about Andy Grove back when Intel was like when he was like the Elon Musk of the
Yeah.
early 90s or something, right? And he talked about how training is one of the highest leverage things a CEO can do, because if you can duplicate yourself, there's just so much more reach. When you think about taking people, like they've obviously achieved a high standard, they were a litigator of the level that you would like to see, but then you're adding a new skill set, potentially, halfway through a career, later in a career. Can you give some like rookie mistakes in trying to reskill
Yeah.
or add skills, and then some of the things that have been successful?
It's a great question because it really goes to the core of the business. Because this is a brand new asset class, you can't just go and build your business by poaching people from other companies who are already doing this. As you say, you're hiring people mostly from law firms, or people who have done in-house litigation at big companies. You're hiring those people out of a litigation role, and you're turning them into an investor. And that's a process. Lawyers are not noted for being, the most commercial and the most numerate of people out there. Lots of people go to law school because they don't want to deal with numbers and math and Excel. And we turn around and say, well, that's exactly what we do. And not only do we do that, but we do a whole lot of complex data science around the investments that we look at as well. And so there's a real process that we need to go through. First of all, it's just trying to find people that come with that commerciality to begin with. So you're looking effectively for that DNA, if you will, in the people as you're talking to them, because lots of people are interested in doing this. Lots of people, leave law firms after they've been there for some years and are looking for a different career path, and we're an attractive place for those people to end up. But it's a question of, how commercial are they? How numerate are they? How can we have some confidence that we can turn that brain of theirs that was just about litigation, turn that brain of theirs into being an investment manager as well? And we've had to do that since the very beginning, because the people we've always hired were coming out of those places. So like Andy Grove, that's a huge effort. And, I think it's successful for us in the sense that once people make it here, they tend to stay for a long time. But there's no question that some number of people show up and they figure out that they're not, in fact, as commercial as we and they were hoping.
Yeah. Can you give us some like granular examples of like, what does it mean to measure their numeracy? What does that look like to, sift between the people who interview well versus the people who really are the right fit?
Well, some of it you can do with really, easy interview questions. You ask people what the rate of return on their personal 401k portfolio is. And if they have no idea, that's probably not a great sign. You can actually hand somebody a laptop and see if they can build a simple Excel model. And, you'd be astonished at how many lawyers simply can't do that. And then we do more sophisticated things than that as well. Before we hire people, we give people a pretty significant case study to work on for a few days, and come back and present their findings to a group of us. And that, it's no different than a business school style case study, but it requires them to exercise some muscles there that probably weren't exercised every day working at a law firm.
Yeah. I mean, it makes me think about like special ops or pro athlete organizations where they spend a lot of time screening. And then
Right.
even after they get the right person, they spend a lot of time training. So, there's a lot of lawyers in our country who have a pretty healthy self-image, and maybe don't think about themselves as needing to learn as much. When you think about taking someone they've got some ambition, they've got some drive, but then they also need some humility to learn a skill set that they're not used to. What does that training process look like? How do you know if they're really getting it?
So it's a team process. We invest as a team sport. We don't invest as individuals. And so when you come into this business, you're matched up with a bunch of your colleagues, and you spend a whole bunch of time working together with them on live deals. And in that, we're probably not particularly extraordinary. You wouldn't see a dramatically different process, I think, in lots of other places. But it's a tried and true approach, and it really does work. But I think the important part of that is all about a team investing approach. We don't, this isn't a trading floor kind of environment. We don't reward the person who yells the loudest or so single-mindedly goes and does the thing. We have a very disciplined investment process that runs all the way through the firm, all the way up to an investment committee. And so everybody is responsible for the failures and everybody is sharing in the successes.
I'm interested in your thoughts on this subject. It is something that's such a strength in the alternative asset community of apprenticeship, mentorship, team sport. Why do you think so many other parts of corporate America try to treat it more like school, like you have to win on your own? Why do you think apprenticeship isn't a bigger part of the American corporate system?
It's an interesting question, and if I think back to my days at Time Warner, for example, Time Warner was a very political environment where you were trying to get ahead by establishing your own particular place. And you could often do that without the same kind of team sport approach that you need, I think, in an investing business. And so, if you can, when I think about the task of running a cable system, for example, yes, you need lots of people to do the component parts of those jobs, but you can pretty much be the single directing mind of that cable system and therefore come and say, look, I did it. I made the numbers or I didn't make the numbers, in a way that I think is difficult with complex investments.
That makes sense. It does feel like they miss out because they're not as forced into it, because it's not as structurally required. It seems like they give up an advantage that they could gain.
I agree with that, and you see that in my own career trajectory. I left what was objectively a big, well-paid, important corporate job at Time Warner to go and basically do a startup. To start my own venture capital firm, and I did that because I was frustrated at how much of my day at Time Warner was taken up by things that I didn't really feel like were value creating. I think there's a risk in really big organizations that unless you're very good at managing them, that happens a lot.
Yeah. Well, I've got an audience question for you. I have a friend who's worth a few $100 million, and they're, talking about having their family office, maybe start investing in space, maybe become a Burford investor. Okay. And so I'm going to ask a question that I actually don't know what it all means. So maybe you can explain what it means and why they would have asked. But I told them, hey, I'm about to interview, the CEO of the #1 legal finance firm in the world. What questions do you have? And they said, curious what he thinks the future of LitFi looks like, and if mass torts are proving to be more problematic than we all expected.
So I think probably the reason you're getting that question from somebody at a family office is because a lot of capital has flowed into the mass tort space over the past few years. And let me, for those of you those of your listeners who don't really know what that means, let me just give a 30-second potted history here. If you've got something that has done injury or harm to lots and lots and lots of people, we used to mostly deal with those kinds of cases through class actions. But the theory of a class action is you're supposed to have the same kind of harm. So the prototypical example of a class action is you're a shareholder in a public company. The public company has gone and done something naughty. The share price has fallen as a result. And so every shareholder has had the same loss. The stock used to be $10 and now it's $5. And so you have a loss of $5. And so you as a class of shareholders might well go and sue for that $5 of loss. The class actions, though, were not popular with corporate defendants because they allowed people to gang up together and bring these very large cases that were risky for companies not to settle. And so there was a general unhappiness with the kind of class action litigation that you saw in the United States. So what happened as a result of fairly intense lobbying is that the use of class actions has been constrained. And so instead of class actions being the predominant way of getting redress for those kinds of injuries, now you really need to have that identical injury. And so when you think about things like pharmaceutical drugs or medical devices or environmental torts and so on, your injuries are not identical. You and I might take the same flawed drug and it might do absolutely nothing to me, and it might cause you to get liver cancer. And so you and I have very different damages in that case. And the argument is that the class action process doesn't work well. So instead, what we have now is, from my perspective, a relatively unsatisfactory situation where you and I, or me if I had a little injury, would each need to file our own individual lawsuit. But because we're suing over this drug, there are going to be thousands and thousands of these lawsuits. And so what the courts then do is they push them all together into one big case for administration of the lawsuit so that you don't have these going on all over the country. The problem with them is that they are not as supervised by judges as class actions are, where the judges control really the settlement process and the dynamics, whereas mass torts are a little bit more of the Wild West. And so what has happened is that mass torts are seen as a very attractive investment area. And we don't do a lot of mass tort investing, but they're seen as a very attractive investment area because companies almost always settle them, because the risk of going to trial on these thousands and thousands and thousands of cases is too great. And so companies feel beleaguered by the presence of the mass torts, but investors are finding that if they plow money into finding more plaintiffs, they can really get good returns. And so there's quite a lot of investment right now, and there has been a problem in those investments because COVID slowed down the whole court system. And so now, if you put money into mass torts, you almost certainly have had the duration of those investments extended considerably. So they're not as profitable on an annualized basis as you were hoping for, and a number of them are becoming distressed because the collateral value is no longer supporting the financing, including the PIKing interest. So that's the genesis of the question. And my short answer to it is, I think there's probably a financial shakeout coming in the financing of mass tort actions.
What are the potential changes that you could see, like could be A, B, or C?
Well, I think what you're going to see in the short term is you're going to see a number of the loan style financings that have been done go into distress. And a number of them are already distressed, where there simply is not enough collateral value from the likely resolution of the case to pay the interest and principal on the underlying loan. And so that's going to require, I think probably an industry-wide level of renegotiation of a number of these deals. And it probably will make the future appeal of these cases a little bit less for some of this. There was a real period where money was just gushing into this space.
Yeah. Well, I want to shift gears for a minute. Let's start with, what's one of the professional accomplishments you're the most proud of?
Well, at this point, I'd obviously have to say founding this business and by extension, founding or professionalizing what has become a global asset class. So that's got to be pretty significant on my resume, even though I'm proud of other things in the past as well about litigation and other successes along the way.
And then what's one of the toughest things, either investment-wise or entrepreneurial, you've been through? And what was like your mental game for getting through it?
Well, I think for anybody in sort of your and my vintage, the financial crisis has to be up there. The 2008, 2009 financial crisis. It had a profoundly disruptive effect on everything economically. You were sort of left wondering for a time if the world was even going to keep on turning economically on its axis. I had at that time a business running that was not successful because of the decline in equity values. And so that was certainly a challenging and unpleasant time that I would not have any desire to repeat.
Yeah, I mean, it certainly was for me. We had the exempt market laws change in Canada, and I lost I think 80% of my sales force in like 10 days. because of the regs that changed and the whatever. And, we were a quarter of the way into the business plan and just got hammered so hard and uh, had put all the blood, sweat, and tears and made the promises and all the stuff. And it's kind of like getting hit by a hurricane. Like
Yeah.
you were not going to hold it back.
Yeah, like I think, look, if you think about our lives, I think there's sort of two signal events along the way. That was one, and 9/11 was another. And 9/11 had a meaningful, wasn't so much that it was a crisis for me, but it had a meaningful personal impact. I was living in New York. I was sitting outside as people were walking home covered in ash. And that day made me change somewhat the trajectory of my life. That was the day that I really decided that I was going to leave Time Warner and do my own thing, even though I didn't actually affect that for another couple of years.
When you think about explaining this investment, which is not as straightforward as we bought this building, we're collecting this much rent. Okay. I would love to hear your thoughts. We have so many investment fund managers that listen to the show or have been on the show. You think about, growing 7.4 billion in assets under management. That's quite a feat. Can you talk about some of the principles that have helped you make something complex more understandable to your investors?
It really does boil down to simplifying it. You say it's more complicated than a building and some rent, but in some ways it's not. Like, everybody knows what litigation is. Litigation is just an effort to get money to move from one pocket to another. If I'm suing you, it's because I believe that you've caused me some sort of economic injury, and you should have to write a check for that economic injury. And so the question is just sort of like the building. Is this a good building? Is this a good lawsuit? Is the rent roll going to pay in this building? Is the lawsuit going to win or settle? And is the defendant capable of paying whatever that settlement is? Can I get my hands on the money? So it's actually not that complicated at a very basic level. The complexity comes when you dig into the actual analysis of the cases. Because, yes, there's all sorts of nuance and uncertainty that goes along with litigation. People rarely are suing each other because it is absolutely clear that one is right and one is wrong, right? Those kinds of cases don't tend to end up in court. The cases that end up in court are the cases that are the 60-40 cases. There's a 60% chance that you're right, or there's a 60% chance that I'm right. And so, to continue your real estate analogy, it's sort of like looking at a dilapidated building and trying to figure out economically and as a matter of development, can you fix it up? So there's nuance to it, but as a simple matter, it's a simple proposition.
I like your explanation. No wonder you've been so effective. How big is the organization, staff-wise, or contractors, or how many people on the team now?
It fluctuates. It's somewhere around 170, 175 people globally.
Yeah. What are your lessons to founders who are growing rapidly and, maybe they've operated for a number of years with a team that feels much more manageable, but they've been lucky enough to get product market fit and they've got a lot more customers and now they're getting a lot more staff and they need to run a different kind of organization. What's your advice for adapting and getting to these next levels?
Yeah, I think, the risk always with founder-run businesses is that founders, are incapable of taking their hands off every single little decision, which both gums up the works in terms of letting the business grow and expand, and also interferes with the development of a broader team. And so I think you always have to have your eye on, where is this going and how are we going to get there? And what do all of the tools that you need to get there? Because you can't possibly do it alone. Like my business is a global business. It runs all over the world. I've got people on the ground in the Middle East, in Asia, in Europe. I can't be in all of those places. I can't be in all of those meetings. And so it's really back to what we were talking a little while before about. It's finding the right people. It's finding people that you're comfortable delegating, your brand to. And it's a scary thing because, founder businesses are a little like your child, right? You founded this thing. You have a very clear idea of what it should be, how it should work. And it's scary to give that over to somebody that you've just hired off the street. and say, well, I hope this goes well, but that's what you have to do. Like, you don't have any choice, and you can't grow the way that the proposition might well take you if you don't do that. So I think that's the most critical element, but you can combine that with an awful lot of communication. And technology, and I've always been a huge technology fan. Technology makes that easier. So, it's easy to have communication devices that are not burdensome, but that let you keep a pretty good finger on the pulse of what's going on in the business.
Yeah. When you think entrepreneurially or investment fund manager wise, whichever hat you want to put on here, there's so many ambitious, smart people, entrepreneurs and fund managers who would like to accomplish what you've done and haven't been able to achieve it. What do you think is different about you? What have you done that maybe not everyone else has done to achieve this much success?
Well, look, some of it is you have to chalk some of it down to luck and timing, right? That you can't make that stuff up. I was lucky enough to have this idea that I was already implementing a little bit when there was real demand for that idea, and I had I suppose the credentials and the experience to convince investors to give me a whole bunch of money to go and explore that. And that's hard. Like that's hard. And if I'd had exactly the same idea and tried to execute it in exactly the same way 15 years earlier, I probably wouldn't have succeeded because I wouldn't have had the collection of credentials that would have let investors be comfortable, rolling the dice and taking a risk on me. And I can imagine that being extremely frustrating. Back in my venture capital days, that was always the issue, right? People would come in with things that you thought were really good ideas, but you'd look at the team and you just say to yourself, I just don't think these guys are quite ready to take it on the road.
Yeah. I mean, to me, I think about it kind of like the way I think about stoicism is like, there's what happens to you and what you do about it. Like as a surfer, when I used to be in M&A at Citi, the reason I moved to Southern California is so I could surf every morning because I married this my California wife who didn't want to live where it was cold back home in Canada. So we had to give up snowboarding, right? And it's like, you are not going to stop the wave. The wave is going to be what it's going to be. But where you position yourself, how you paddle, have you done the prep work to have strong enough shoulders and enough like pattern recognition to know where to be and how to paddle hard enough and these kind of things. So I get you on the luck and the timing. That's the wave. And what I'm interested in is, what credentials, you've got the shoulders, pattern recognition, you've been doing some of this and just some of those things.
Well, I think I agree with that. And, to torture your analogy a little bit further and use skis instead of snowboards, I do think not getting too far out over your skis when you've got something that is untested is, I think, important. I see many more business failures than successes when people push too hard too fast, when they overextend themselves too much. And I know that sort of flies in the face of some of the conventional wisdom, which is like move fast and break things and, give it a try. And if it doesn't work, well, you try again somewhere else. And I get that. I'm not suggesting that, we should all lapse into stodginess and slow motion, like we're, doing geriatrics. But I think it was important for my business, not to expand too fast. I think it was important to show investors that it could be profitable. I don't think this would have worked as well if I had basically said, okay, I'm sure this is a big opportunity, so I'm going to run at a loss for 5 years. And then I'm going to hope that in year 6, the manna comes down and, things are terrific and booming. I think it was better, at least for this business, to establish its bona fides and grow a little bit more slowly, although it still grew pretty rapidly, grow a little bit more slowly and turn a profit and use that as a vehicle to attract more capital. Now, that's not necessarily a lesson that applies to non-capital intensive businesses in the same way. But if you are a business that depends on a supply of capital like we do, I think it was much better for us to grow the way that we did, which, by the way, along the way has let us have the lowest cost of capital in our industry as well, which is a huge competitive advantage.
When you think about navigating this idea of making the small bets, pushing, making progress without risking any fatal mistakes, how do you think about or what advice would you have for a founder about navigating that balance beam?
Yeah, again, in the context of a capital intensive business, I think you probably are taking the risk of fatal mistakes early on. And sometimes you just have to do that to be able to prove the concept and continue to grow it. Like if we had lost the first couple of big cases that we did, that would have been bad. And that would have materially interfered with our ability to grow the business. But you sometimes just have to swing at them anyway, because if you don't, then you won't grow enough. And that, you need to combine that growth and that profitability to be able to continue to unlock capital. Like I now present investors with a 15-year track record of consistent profitability, consistent returns that are well into the 20s IRR. That unlocks the ability to grow a lot more. But so I think it's a balance. But my prior comment was just, there is sometimes, I think, and I probably had this inclination, 30 years ago as well, to really push as hard as humanly possible. And I think sometimes, while that might be right if you are exploiting, especially a new technology market opportunity that isn't as capital intensive, but I think in a capital intensive business, if you do that, you really do run the risk of not being able to get your second fund and grow. And I've seen that happen, frankly, to a number of the competitors of mine in this space. People who got their first funds, pushed too hard, and just have never been able really to make it out of the gate.
Yeah, that makes sense. I guess if it was easy, everybody would do it, right?
So they say.
Um, Whether it's at, R360, the, r360global.com for my marketing pitch here. These entrepreneurs that I lead in the chapter out in the Pacific West who have, created personal net worths over the 100 million mark, or just people at the podcast or friends. I have a lot of entrepreneurs who've gotten their business to kind of this several $100 million level. And they come and say to me, Jess, what did the CEOs on your podcast tell you about getting from the hundreds of millions over that billion mark? What advice would you have for them?
Yeah, I think that's no doubt a significant challenge, because, again, back to the concept of how to run a business as a founder, that's the point at which you have to break the dynamic where you can do everything yourself, right? When Burford was, $500 million of market cap, if you stayed up all night, you could pretty much do everything yourself. And at $3 billion of market cap, you just can't. And so that transition is a big step. And it was sort of a doubly big step for us because it happened really fast. We went, we didn't have a nice smooth curve up. We did a big stair step. Because we saw, we unlocked a bunch of new capital, and therefore we saw the ability to grow really rapidly. And so I think the dynamic around that is really the question of how you go about managing that transition, especially if that transition is going to come with a big step to it. And I think it's pretty hard to give generalized advice about that. I think it very much depends on the situation that you're in and the moment that you're in. But I do sort of always fall back to a team of really dedicated people. You can't do it yourself. You have to have people on whom you rely. They have to be all in on the goal that you're trying to hit.
Well, can you talk us through a little bit what that was like for you? Like maybe give us a couple examples of like, here's something I did differently that worked for me. It may or may not apply to everyone else.
Yeah, and look, you learn, I think, both individually and as an organization from setbacks, often more than you learn from successes. And so, it's getting involved in something that is messy, that has a negative impact on you, that, the market doesn't like. We've been public this whole time, and so we've been exposed to, there's lots of transparency here, and we're exposed to lots of investors. early on in Burford's life, we made an investment behind a really well-known big law firm, really strong litigator. And it turned out that he was duped and we were duped by what was a pretty sophisticated fraud, down to forging foreign judgments and so on. That was a big blow up. That ended up on the front page of the Wall Street Journal. That ended up with, a fraud trial that I had to go and testify in. We lost some money on it. That's an example of something that sticks with you. And, you spend a lot of time trying to think about how to make sure that doesn't recur, what lessons you take away from that. And I think doing postmortems is a really important part of growing businesses. Like we do that every quarter, we pick a few things that have had some issues in them and we talk through them as a team.
I, probably not on the same scale as you, but I remember doing an energy investment in Canada where we later found out the guy had photoshopped an extra zero into the paperwork. And I'd hired a top three engineering firm in the world in this energy space. Sorry, a top three energy engineering firm in the entire country to go do the due diligence, and they couldn't find it. And that was real. He ended up, bad guy who ended up going to jail for something he'd done to previous shareholders in a previous company.
Yeah.
We took over the business. We start going through the paperwork. We start asking for files. And the sales company who the project was going to sends back the paperwork. And we're like, hold on, that's missing a zero.
Where's that zero?
What? And you're like, at the time, we're like, we hired like one of the top three firms in the entire country to figure this out. And they couldn't figure out what can we do. And it's like, wow, I guess we need to take our own due diligence to a different level of intensity than we had ever thought.
And you might have needed some litigation finance.
That's true. He unfortunately had burned his money like it, gone through his money like it was water, so there wasn't a lot to get. But
not left. Yeah.
What do you not get asked about enough that you would like to talk about more?
Because I'm a capital intensive business, I get pigeonholed into the financial services segment. And I don't get asked enough about technology, both the opportunities that it offers, the disruptive potential of it, and the risks associated with it. And I, as I said before, I've got a bias in favor of technology, but it's sort of everybody thinks about the investment side of this business, and I like them to think just as much about the data science side of this business. So. Even you, when you were asking me about our people, asked me, how many lawyers do you have? You didn't ask me how many, PhD astrophysicists we have, because that doesn't immediately jump into the mind about a law-focused capital business. But that's exactly what we do. We have a big team of people who have nothing to do with law and spend their days doing data science here at Burford and improving the quality of what we do and making a lot of use of the proprietary data that we have. And the whole legal industry is being actively disrupted by technology as well. Because law firms are not very visible publicly as businesses. They're visible publicly in the terms of the work that they do, but they're not very visible publicly as businesses. People don't really associate law as being quite as large as it is. Law is about $1 trillion annual business. That's the global revenue profile of the legal industry. And if you add the value of litigation to that, that's several $1 trillion a year. So you've got this enormous global industry that is being actively disrupted by artificial intelligence and other kinds of machine learning technology. It's absolutely fascinating to watch. And it's one of the industries that is most poised for that disruption because all of law is words. And so when you have large language models, they are particularly good at managing a very large collection of words.
My business partner for the last 20 years, one of my business partners, who happens to also be my brother, is an AI engineer. I own part of an AI agency with him. We're doing as much of that as we can in our real estate asset management firm at Connection Estates. Can you give us an example that maybe outsiders wouldn't recognize the way you're applying data science, AI, machine learning, any of that?
Yeah. So when you think about your life today, a lot of what you do is electronic. You send texts, you send emails, you post on social media, but a lot of this stuff is keyboard driven. Even this podcast that you're doing, some AI engine is probably producing a transcript of it that is available online. So all of these words are out there. And what has happened over the last few decades is, if you think back to your youth, you didn't have that dynamic. And you really just had your footprint was only the pieces of paper that you had saved and put in file folders and collected. Today, your footprint is enormous. You have this enormous digital footprint. And the question then becomes, okay, so Jess has become involved in some sort of dispute. So how do we manage that footprint of data? How do we figure out, was Jess a good guy? Was Jess a bad guy? Was he, upholding virtue and honor, or was he illegally conspiring with somebody around the corner? And that the ability now to use smart technology tools to wade through your entire digital footprint and find things that are not on their face obvious, to find connections. You had this conversation with this person and the next day this price moved, right? That kind of stuff is happening in real time, and it's absolutely fascinating.
Yeah, no kidding. Well, this conversation has been interesting. It's something I'd heard of and knew so little about. And it's fun to see like the principles that apply to every business, but then the nuances of how this is applied in the world of law, and especially as legal finance has been this growing industry. Let's start with, what's the website? What's the ticker symbol? What do you want to leave people with?
So Burford is the ticker symbol both on the New York Stock Exchange and the London Stock Exchange is just BUR for Burford. The website is burfordcapital.com, where there's an easy to understand explanation of what this is and how it works. And, when I talk to CEOs and CFOs, there is not a single CEO or CFO out there who says, oh, I'm happy with spending money on law. I'm happy with what I'm spending and what I'm paying to law firms. There's not a single one out there. So the question is what you're going to do about that unhappiness. And the solution is an obvious capital solution. Just in the same way that you lease lots of your capital equipment, you should not be paying your own cash for legal services. And that's what we're in the business of doing.
Well, it's obviously working. Congrats on all the success.
Well, thanks. And thanks for the chat.
Yeah. What do you want to leave people with today on any subject?
Well, you and I are Canadians, so it's got to be something, it's got to be something.
I've got a question on this. I love so many things about Canada. And for me, the US feels like the number one country in the world where your past doesn't have to determine your future, and like the busy friendliness. Yeah. And I love being down here. I mean, what do you like about the US? Why are you still here?
What you just said is exactly right. The first question in Canada is often, so what did your family do? Where did you go to high school? What network are you in? And in the US, people really just care about, so what have you done? What have you been able to achieve on your own? And I'm an enormous fan of that. I came down, like lots of Canadians do, I came down to New York not intending to stay. I was coming just for a couple of years. My wife is Canadian as well. So we came down and worked for a couple of years and just never left. So I completely agree with you.
Yeah, I'm actually quite annoyed with a lot of Americans who want to rip on how terrible the system is. And, there's like, listen, no system is perfect. The United States is not perfect, right? But I get to have like so many people on this show who grew up in like just abject poverty in India, or, Castro took, stole all of their family's money and they came over on a boat and had $50 to their name, or, like a different family, like before the Berlin Wall came down, they went on vacation from the Soviet Union and came over. They had like $200 in one suitcase because nobody was allowed to emigrate from the Soviet Union because that would indicate there was something wrong with it. So, and then they come over and build $100 million, billion-dollar, multi-billion-dollar fortunes with no pedigree, with no, just by learning the patterns of what it takes, having some luck, being willing to put in the effort, learn from the right people. And that just is so optimism producing to
And
me.
and let's not forget in that story that those people are also creating enormous amounts of economic value in the United States. Jobs, companies, I'm a small version of that because, we're a knowledge worker firm, but, I've created 170 jobs that didn't used to exist.
And
And
those are
so
not McDonald's type paychecks.
those are not McDonald's type paychecks. And so I think more nuance than we have in the discussion about immigration to the United States is really important as well. It's not good to have a porous southern border where anybody can just sort of pour over it, but it's equally important not to turn your back on the world. The United States is stronger for having quality immigration, and that's really important to maintain.
Yeah, I've got this soapbox thing of like, anybody who can manage to get a PhD here, we should be trying to do
Yeah.
everything we can to keep them.
Yes.
There's these like obvious people
Yes.
that it should not be hard to get them to stay here for the next few decades of their life, if not permanently. Like that
Absolutely.
the hurdles have
Absolutely.
got to be brought down on that. I mean, give me a break.
Absolutely.
Listen, this has been so fun. Thank you for your time. Congratulations on all the success.
Well, thanks, and same to you, and thanks for having me on.
Yeah. Bye, everyone.